Hi, this is Pete Davison with Advantage Financial. We're here to talk to you today a little bit at the request of RxSafe about Section 179 and some of the things that we get asked this time of year. AFS has been helping RxSafe since 2012 and the independent pharmacy marketplace put together a whole lot of lease and financing solutions to help their pharmacies get the technology they need. Section 179 is part of the IRS tax code that talks about accelerated depreciation. It's available for just about any type of for-profit business. Typically, the limits are up to about $500,000 this year in accelerated capital equipment and software depreciation limits. Usually those are limited to the amount of income that you have, so you may need to talk to your own accountant to make sure that you're getting the best advice. But specifically with RxSafe, some of the things that we've heard, and both from RxSafe and from some of our customers, is that the initial savings can potentially be very significant. RxSafe has done a calculation that shows approximately $153,000 in potential savings over the first 12 months. Where is that coming from? Less fill, potentially 20 to 35K they're talking about. Less put away labor, time that you can save in putting away inventory, some $3,000 to $5,000. No searching for lost items because everything's right there at your fingertips, perhaps another $5,000. No loss due to theft or diversion. You can talk to RxSafe and their representatives about some of the experiences some other independent pharmacies have had about diversion and loss and theft. When it comes to floor space, you can certainly pick up some additional floor space because the RxSafe is going to put the inventory into a smaller footprint. And potentially you'll have a significant potential savings if you use the management tools and work on your inventory. So how does the Section 179 come into that effect? Potentially, if you're investing in an RxSafe at $116,000, $204,000, somewhere in that neighborhood, and you're in a tax bracket of 20 to 35%, that 20 to 35% can come right off your taxes in April as an accelerated depreciation benefit. Additionally, that may impact you on your quarterly estimates for the following year. If you take just some simple math on a 2-tower RxSafe system at a 25% tax bracket, $200,000 in expense would equate back out to approximately $50,000 in tax savings come April. That's significant cash flow. What's nice about that is if you're using an equipment lease or a financing agreement, you may actually be cash flow positive just from that experience itself. I'll give you an example. $200,000 investment on a capital lease on a 7-year term is approximately $15 per thousand, or approximately $3,000 a month, plus or minus. On a 5-year term, might be more like $20 a thousand, or somewhere in the neighborhood of $4,000 a month. If you just do some simple math, and 4,000 times 12 months, it's 48,000 on a tax savings of 50. That could be a positive income, not to mention all the benefits you'd get from the RxSafe. So what are we recommending? Talk to your accountant, find out what technology is right for you, balance the two up, and see if investing in an RxSafe or other technology this year would benefit you, both from a productivity standpoint and from a bottom line standpoint as you plan your taxes and your income strategies for the end of the year.